Hey guys, welcome back. I'd like to discuss the differences between DeFi and real-world assets tokenization. Also stick around towards the end of the video to find out which of the two I feel will reign as the supreme blockchain wave of adoption by 2030, and what would this mean for you as a potential blockchain investor. So let's check out the details next. Right, I want to discuss what is DeFi, what is decentralized finance. Now, what I try to provide here is a simple picture that will describe this in a little bit more detail. So really, in a nutshell, to actually digitize the typical traditional financial services onto the blockchain. That's what we mean by decentralized finance. And some of the services here you can actually relate to. So we all know that we go to a bank to perform a whole heap of payments. We also have the notion of lending and saving as in a traditional bank. Well, these services are also provided in the decentralized financial blockchain itself. But it also has other components within that which are unique to DeFi. So things like bridges and gateways, insurance, all to do with staking your crypto tokens on the blockchain under a proof of stake regime, which means you can earn yield like an interest. In this case, is earning yield on a handful of crypto tokens that you would stake in decentralized exchanges, the famous DEXs, in order to earn that yield or interest payment. Then you have the notion of stablecoins, which are also decentralized forms of cryptocurrencies. In my channel, you have a whole heap of videos explaining what is a stablecoin. But really, these are typically, and the most common type of stablecoins are fiat-backed stablecoins, which means it's cryptocurrencies or crypto tokens that are pegged to a fiat, whether it's the US pegged dollar, and you've got Tether as a leading example. But then you have DEXs, as I mentioned earlier on. These are like decentralized exchange platforms that are used to trade and swap one crypto token to another. And then you have other types of decentralized financial lenders out there like Compound, RWA, you got Maker. These are like the most popular, high liquid or auto market leading lending platforms that are used for staking your collateralized crypto tokens in order to earn that yield, as I've discussed a moment ago. And by doing that, you're providing or injecting liquidity into the decentralized financial blockchain so that others can borrow from, right? Typically to convert or swap from one token, a crypto token, to another. So this is a typical suite of components that you would associate with a DeFi. Whenever we talk about decentralized finance, well, these are the usual components that we usually see. So that is DeFi. And what are the typical decentralized apps that we see for DeFi? I've already made a mention of those. So we've got Maker, Compound, and RWA. Those are prime examples of lending applications, lending dApps in decentralized finance. Then you have a whole heap of DEXs, so decentralized exchanges, like the case of Uniswap, Curve Finance, SushiSwap. So between Uniswap and SushiSwap, they take the lion's share of the DEXs market, particularly within the Ethereum blockchain itself. And like I said, DEXs are primarily used for swapping and trading one crypto token onto another. And then moving on to what are real world assets tokenization and also the use cases. So tokenization here is converting ownership rights of a physical asset typically into a digital token representation on a blockchain. And what does this mean? What are the opportunities for doing that? Well, it allows for fractional ownership of these digital tokens and also to inject liquidity into the blockchains. And really, this is mainly used for trading purposes as an investment vehicle. So let's take the example of some of the use cases that you got listed out here. Let's take the example of a first-time buyer who can't afford to buy a real estate property in the physical analog world to be able to live in, because they have to worry about putting a hefty deposit in order to get themselves a mortgage loan from the bank. Well, how is this manifested in the real world assets tokenization on the blockchain? Well, instead of putting that 5-10% deposit, you can just simply trade as a matter of a few dollars to get individual units of a digitized prime real estate on the blockchain instead. And by doing that, you're increasing obviously a huge wave of more market participants, and as a result, increasing the amount of capital and liquidity onto the real world assets blockchain itself. But it's not just real estate here. The potential of other use cases is growing by the day. It's not just real estate, there's also other financial instruments, whether it's stocks and bonds or equities, even arts and collectibles, also intellectual property, legal documents, also basketball teams, football teams, even stamp collection. So anything that has an intrinsic financial value attached, those can be certainly represented as real world assets tokenization onto the blockchain. So that is real world assets tokenization. Now, lastly, I want to talk about the main differences between the two. So as I explained in the outset for DeFi, it's really is used to decentralize traditional financial services, typical financial services onto the blockchain, like lending, saving, yield farming, and also the notion of crypto swapping. So swapping from one crypto token onto another in the decentralized exchanges themselves. So those are the typical services that we usually associate with DeFi. And I've also lastly want to give you a glimpse as to the total addressable market value for DeFi by 2030. So if you refer to the source from Grand View Research, they are estimating roughly $230 billion market, total addressable market for DeFi by the year 2030. Now let's move on to real world assets tokenization. And this is where I believe real world assets is the reigning supreme blockchain wave, because it digitizes more physical real world assets rather than just DeFi, but many more. So it really, real world assets tokenization takes care of digitizing all physical real world assets, everything that has an economic value that you can think of in the physical real world. Those are potential candidates for digitizing into the real world assets tokenization onto the blockchain. And really, what is the service potential there is pretty much used as an investment vehicle to hold on and invest in these digitized token assets on the blockchain with a view to making some gains later on down the line. That is pretty much the typical service that you would associate with real world assets tokenization. And you can see the TAM for RWAs completely dwarfs DeFi. I mean, we're talking about between $10 to $15 trillion for RWAs and tokenization by the year 2030. And the source for this estimate has been provided by Boston Consulting Group. And if you compare this estimate with the DeFi TAM estimate, it's 15x. So for these reasons alone, you can quickly deduce that real world assets tokenization for me will be the leading blockchain wave by 2030, more than DeFi, because DeFi just looks into the financial realm itself and that's it. Whereas real world assets tokenization has a much bigger market and as a result, bigger potential, which means more liquidity drawn into the industry, more investable opportunities for investors out there. So I hope that you've enjoyed today's episode and it's given you that clarity and potential as to what is DeFi on one hand, what is RWA, and the subtle differences between them, and why I think RWA is the way of choice for investors. So if you enjoyed today's episode, please don't forget to hit the like button, to share this video to your friends and colleagues at work. And if you haven't done so already, please subscribe to this channel, as I regularly post interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So until next time.